Well, I do believe that there are going to be millions and millions of people who need this extra money. The extension of the unemployment and the $1,200 stimulus check that both sides have agreed on won't necessarily be enough, because things haven't really changed. And this Friday we have the jobs report coming out, so that'll be interesting to see what happens with those numbers. Of course it's going to affect the economy, but only certain sectors of the economy, and herein lies the problem. We still have other areas that are doing well. The manufacturing numbers have come out actually pretty good compared to what their expectations were, which means that we are seeing a pickup in terms of things being produced. So that's a good thing. I don't know if it's necessarily really translating to jobs yet. But then anything that's in the entertainment and leisure end of the businesses are doing poorly. Still, restaurants, 1/3 have gone out of business. Obviously, movie theaters and the whole movie world, as films aren't being made. And these areas, hotel, air travel, vacation, this is a huge part of the economy as well. So it's going to be interesting to see what they decide to do. They may come up with a compromise. They talked about that initially, of some level of the unemployment, just not up to 600. And I believe they'll come up with something. Right now, there's no rush because the market's doing well. But if the market starts to tumble a little bit, this is an election year. And so where we're really seeing this reflected the most is actually in the whole financial sector of the market, the banking sector of the market, which with even NASDAQ going to new all-time highs and tech going to new all-time highs, albeit on low volume, the financial sector is still in a bearish phase. So the question that I'm wondering and will be watching for very carefully is what happens after Friday, let's say, with the jobs report, if the loan defaults and the number of people that are out of work and, like you said, mortgage defaults and everything else that's going to happen as a result of people not having more money impacts the financial sector even worse. When does that act like a ball and chain to the rest of the market? And that's unknown at this point, but it would definitely merit something to keep an eye on. We have a tremendous amount of retail investments going in through different kinds of retail investors, including, as I think we've talked about before, the Robinhood investors that are coming in and buying the market and following the money. Two is, I do believe, as you say, the hope for stimulus is still very much there. People can't believe that the government is going to allow people to suffer while they battle it out because of bipartisanship. And also, the other factor really is that some of these economic statistics have improved a little bit. Earnings season is upon us and hasn't really done as badly as people expected. So all of this is propping up the market. But it's like a tinderbox. Anything could make it all go poof, because that, like I said, could be the ball and chain. I have no reason to believe anything other than gold is going to go up, and every dip in it is a buy opportunity because of everything we just talked about, that potential tinderbox that can go up in smoke. So there's where you're going to see people flocking to. Because the dollar's been weak, any inflationary fears, and something new developed today, which is the Beirut. There was a big explosion in Beirut, which sent the oil and gas prices going up. That's been the metric in the inflationary situation that the Fed looks at that has kept inflation numbers down. So if we went into any kind of escalation in terms of pressure in the Middle East, not only would that send gold even higher, I think gold could go to 3,000 like that if that happened, but it'll also send oil higher and all of the commodities prices higher and will not be good for the stock market. Of course, there'll always be pockets of the market that do better than others, and even if things go down, there will be things that don't skid as fast as others. But nonetheless, this is just so crazy a world we're in right now, where you have all these matches lit and the market ignoring everything, with all of us traders wondering what's going to be the thing that's going to send the market back down. We don't know yet. Just based on the fact that it's now going into this second or third or fourth parabolic move up, I would say probably just looking at round numbers, 2,500 would be the next place to look. Silver is starting to play a little catch-up to gold, which is another inflationary indicator. And silver has that double-edged usage of some industrial production So with industrial production increasing and its usage in clean air energy, then that's a positive. And then, of course, a hedge for inflation is another positive if that we go in that direction, which looks like it will. So I think that silver can continue to go up too. Its peak high was at like $40, $50 an ounce, about 2011, and we're just about halfway there. So yeah, it has room. If you're going to get involved with gold, you have to look at it in terms of risk always. We've talked about this so many times. I'm all about the risk and the reward. So if you're going to get into something that's going parabolic, you have to get out very quickly if you start to see that turnaround. And I don't mean just drift down lower, consolidation. I mean all of a sudden you get a spike up in volume and then you get a spike down in volume and it closes much lower. That would be a signal that perhaps we'll see some liquidation. But otherwise, it has been such an incredibly orderly rally. It's actually been ridiculously easy money. And as long as it stays that way, why not? Get on the train, but just always be frosty.